If you are keen on getting on the property ladder, but you're struggling to save a deposit, or perhaps you feel like your income could be a barrier when it comes to getting a mortgage when you want, there are some positive signs in recent months with a number of lenders introducing zero deposit mortgages. We've also seen lenders offering higher income multiples, and some have relaxed the rules around stress testing, which I'll come on to a bit later. So let's start with the zero deposit mortgages, or 100% loan to value mortgages as they're sometimes referred to. Now these allow you to borrow the entire value of your home, or the one you want to buy, meaning that you don't need to put down any kind of upfront deposit. So if you want to buy property worth £200,000, then you could borrow theoretically £200,000. Now these types of mortgages were much more common before the financial crisis back in 2008, but they largely vanished afterwards, with a few exceptions like guarantor mortgages. Now though, they're making a comeback, which could help those of you who are struggling to save a large deposit, especially when rental costs are so high. First up, there's Skipton Building Society's track record mortgage. That was launched back in 2023. Now, every mortgage I mention, we do have reviews of on the Main to Masses website. There'll be links to those in the notes. Now, this particular product was designed for renters who can show 12 months proven track record of paying their rent and bills on time. The maximum loan is £600,000, and the loan to income multiple is typically 4.49. No, it can go up to 4.75 for those with incomes over £50,000. Then we have April Mortgages, who launched their 100% deal in May 2025, so it's a brand new deal. They offer 10 and 15-year fixed deals, which are open to both first-time buyers and home movers, with a minimum household income requirement of £24,000. The maximum loan to income multiple is 4.49 times income, and the fees are around £1,200. And another new entrant is Gable Mortgages. They've recently launched 2 5-year fixed deals. One for standard properties, and a slightly lower rate is on offer for new build properties. Again, they've got a maximum loan to income of 4.49 times, though they say they'll go up to 5 times the income for key workers. But a word of warning here, their fees can be quite high, ranging from just over £2,000 up to nearly £10,000, depending on the property price, and these cannot be added to the property price. You're going to have to pay that fee up front. It's important to note that these deals often come with very specific eligibility criteria. So Skipton, for instance, need that rental history. April Mortgages has that minimum income, and both April and Gable Mortgages are currently only available via mortgage brokers, meaning that you can't go to them directly to secure a deal even if you want to. So as you can see, there's been a lot of change in recent weeks in this portion of the market, which is good news for people who are wanting to get onto the property ladder. There's also some changes on things like April Mortgages, where they're allowing unlimited overpayments without incurring early repayment charges. Again, that's something that's quite novel to see. Now, of course, I've got to mention some of the cons about these types of mortgages. Obviously, the rates you get are typically far higher than if you are able to put down even a small deposit of, say, 5%. So, for instance, Skipton's 5-year fix at 100% LTV is 5.37% as I make this. If you compare that to Nationwide, who at the same time are offering a 5-year fix at 4.83% for those with a 5% deposit, that's a big difference, and it'll have a significant impact on your monthly repayments. It goes without saying there is that negative equity risk. So if you take out a mortgage that's 100% of the value of the property that you're buying, and the property falls in value, then you will owe more than the property's worth, and you will technically be in negative equity. Now, the other thing I would say is the high fees. Look out for those. Some of the products do have relatively high fees compared to others in the market. So Gable was one of the ones that we've already mentioned. So do bear that in mind when you're looking at these products. And one for the future, when you come to the end of your deal and you've taken out one of these 100% LTV mortgages, then you might find it hard to remortgage if you've not built up enough equity in the property. So if the house price hasn't risen, or you haven't managed to overpay in any way, then you will be limited in your choice of products when you do actually look to remortgage. I'm going to focus now on the changes to affordability criteria from lenders and the amount that they will lend to you. So focusing first of all on income multiples, there has been some positive changes in recent months to that as well. Now on screen, you'll see an article about how much can I borrow on my mortgage, which is from the Money to Masses website. What we do is we give a roundup of the income multiples that various lenders will offer. Now, looking at the table on screen and running through it, you can get from Nationwide 6 times salary. There are eligibility criteria for each of the ones I'm going to mention. I'm not going to run through all of that criteria, but for example, with the Nationwide one, it's available on 5 or 10-year fixed rate mortgage deals only. That is something you'll see on some of the highest multiples. There is another lender, actually, April Mortgages, who allow 7 times salary, and they have a similar caveat where you have to borrow for a long term. So they have a 10-year or 15-year longer term fixed rate that you have to borrow at if you want that 7 times income multiple. But for Nationwide, it's 6 times. Atom Bank also give you 6 times salary. They don't have that long-term fixed criteria, but they will give you a maximum loan to value of 90%. Then you've got Leeds Building Society at 5.5 times salary, Lloyds Bank at 5.5 times salary, Halifax is the same, as are Santander, Metro Bank, HSBC, Barclays and NatWest. Some lenders only allow the higher multiples on what are known as professional mortgages. So those are mortgages that are available to certain workers. It could be things like dentists, barristers, or people who are key workers. So that's some of the caveats there. When it comes to the higher income multiples, the natural question is, does that apply to 2 people if they're applying for a joint mortgage? The answer is yes. So if you're applying as a joint mortgage as a couple, then it will multiply both your salaries by that factor of, say, 5.5 or 6. So that will increase the amount that you can borrow together. Moving on to stress testing. In addition to higher income multiples, several of the UK's largest mortgage lenders have actually relaxed their stress testing rules after the FCA expressed concern that the way that some lenders are currently applying stress tests might be unduly restricting access to mortgages for people who could otherwise actually afford them. So Halifax, one of the UK's largest lenders, made significant changes to its affordability calculations in April this year by reducing its stress test rates. A typical household with an income of £75,000 could potentially see their maximum borrowing capacity increase by as much as £38,000. Similarly, in May, Nationwide Building Society announced it was reducing its affordability stress rates by between 0.75 and 1.25 percentage points. Now, that means the average mortgage applicant could borrow around £28,000 more than previously. So these changes to stress testing will benefit everybody. And so what's important is, just because you may think that a couple of years ago when you took out a mortgage that you didn't have as many options and you won't be able to afford to remortgage elsewhere, you may be able to remortgage elsewhere. So you don't have to just take a new product with your existing lender via product transfer. You may be able to get a better rate now because of the increase in multiples or the changes to stress testing and affordability testing with lenders. So do make sure you seek advice so you can shop around. You may be able to reduce your mortgage rate more than you had previously thought that you could.